Hello, Oracles. Well, this was one of those weird days where the entire market was green, but Tesla was red. Because we're going to be discussing more about the market right now, I put on the green shirt. But unfortunately, tomorrow I'm going to have the red shirt on. Not a big deal, though, because we saw a bit of a pullback of uncertainty earlier in the day, which we kind of anticipated going into the Fed minutes that we were getting around 2 o'clock this afternoon, Eastern time. So we kind of anticipated that. We knew it. And then once we got the Fed minutes, the market ended up rallying. Now, it took a little while before the market did end up going green, and it did go significantly more green than we finished. So we saw green, and then we saw a little bit of a sell-off. Now, one thing that I noticed when it came to all of this is the last few times that we've gotten CPI data, that we've gotten Fed minutes, that we've had the FOMC meeting, the market was very green afterwards. We went extremely green, like 2 to 3% up in all of the indices. And then the following day, we went deep red. So now we got the Fed minutes, basically stayed flat. I mean, we were down earlier, so we basically just recovered from where we were, up about 0.3% across the board. But that was all we were. So what are we looking at for tomorrow? Let me know your thoughts in the comments on this, because I'm thinking if we didn't get that big rally, after the Fed minutes today, does that mean that we're going to perhaps rally a little bit more tomorrow? Or are we going to sell off again? Now, timing-wise, it is a little bit different because we do have the CPI data coming out next week. Now, the information we got from the Fed minutes today, they didn't mention a recession at all. Many people are looking at this saying, how could you not? And I know that these minutes were, from a month ago, but even a month ago, everybody was like, dude, we're seeing what's going on. We already have 1 quarter of negative GDP. We're looking at, just the anticipation of another one coming. A lot of the data is pointing to a recession happening with a 2nd quarter of negative GDP, but there was no mention of it. So they didn't say anything about that, but they did talk a lot about inflation. And obviously we know this is the huge focus that they have right now because unemployment is doing very well. Right now it is an employee market where people can go out and just basically get what they want and dictate what they want when it comes to pay rates and whatever. So that's not a focus for the Fed right now. They need to get inflation down. So that's what they're focusing on. So the CPI data next week is going to be vital to what we can anticipate from the FOMC meeting at the end of this month. So right now it's kind of up in the air. Are we getting a 50 basis point hike? Are we getting 75 basis point hike? The CPI data might indicate some of that. And now we have been seeing oil and commodity prices coming down very rapidly recently. This is something we had discussed a couple of weeks ago of, this is the signal that we're looking for is oil prices are just going to start coming down. We know that we have President Biden is going to be going over and speaking to the Saudis to discuss oil prices. So perhaps this is a little bit of a sell-off in anticipation of this discussion because, usually when there's a meeting like this that goes on, there are results that come out of it. So it looks like, maybe the oil bubble that we were in for a little while there is starting to pop and deflate, and maybe we're going to get these oil prices down to that $70 to $75 range that we're looking for to get under to really bring inflation down. Now, despite the fact that these oil prices are coming down right now, are not going to be reflected in the CPI data that we get next week because CPI data that we get next week is all based off of June's numbers. And when it comes to the CPI, and I know it's been asked before in here, it's not based on CPI to CPI cycle. It's strictly in the month of June. So June 1st to June 30th, that is when we are going to be seeing those numbers. So that's what we're going to get on July 13th next week. So we'll see that, and then with the oil prices coming down now, that is when we're going to see that reflected in next month's CPI data as long as we continue on this trend. And so with oil prices trending down, we are expecting a very high number next week for CPI at 8.8%. So these couple of things are going to probably give us the indication as to what the Fed is going to do at the end of the month. Now, timing-wise, there's going to be a lot going on at the end of the month. So again, the one thing the market does not like is uncertainty, and we're going to be getting a lot of that going into the end of the month. So you can think positively or negatively, whichever way it's going to go, but the uncertainty, without a doubt, is going to cause more volatility than anything else. So we have Q2 earnings are going to be starting at the end of the month. Tesla's is going to be on July 20th, and then we get the tech earnings following right after that. And so going into that, that's going to be uncertainty to begin with because we're expecting a potential earnings recession coming as well. Then we have the FOMC meeting on the 25th and 26th, and then we'll be getting the first GDP data at the end of July, and then we get the CPI data in August. So a lot of uncertainty going on over that time, but I think if we see the Fed come in with a more dovish stance, saying, you know what, we see inflation is coming down, oil prices have come down, commodity prices have come down, those are the things that we could not control. So if those are coming down, then the things we can control are also going to come down most likely. That's going to put us in the right direction to go more dovish. And then if we get the GDP data, even if that shows that we are in a recession, with the Fed going a little more dovish to battle that as well, the markets may still be uncertain because we're going into a recession, but if the Fed goes more dovish and then we get the August CPI data that comes out and shows that yes, inflation is coming down, then that might kind of instill a little more confidence in what's going on in the economy. And what's going on right now is the economy and the market have absolutely no confidence in the Fed whatsoever. That is definitely showing. We had more confidence earlier in the year, but right now and lately, the market is like, dude, you didn't even mention recession in your minutes, and we're clearly going into one. So what is going on? So again, lots of uncertainty, still more questions than answers, and so that's why we're going to be in the market that we are in. But again, in the near term, we may see some green just because we didn't go crazy green today. But even with that, we've got CPI data next week, leading to more uncertainty. So again, lots to digest. This is, again, for me in this market, I just kind of take what the market's giving me. So if it's going to give me a buying opportunity, I'll take it. Yesterday, I bought a little more Tesla around 660 because it gave it to me. Today, we dipped down to 681, and then we recovered back up to 695. So still a good day, still pushing that 700 mark, can't really break through. That's fine because that $700 mark means that it's going to be a great support for us when we do finally break through it. And one thing to remember from all of this news that is going on is the reaction that we get from the market is a 6-month out reaction, because the market and the big money usually trade 6 to 12 months in the future. So they'll take a look at the data that we got today and say, well, okay, we got the data today. What does this imply for the market 6 months down the road? That's how this is all going to trade. And a lot of times this is why we see some information come out and then the market goes in the opposite direction that a lot of times we might think, because it's not based off of the immediate change. Because the Fed raising rates, and don't forget, this is lagging data that we're getting. This is minutes that were discussed a month ago. And so what ends up happening is the Fed raises rates, and it's not like the Fed is like, all right, we're going to raise 50 basis points today, and all of a sudden tomorrow the market's going to reflect that. It's not how it works. It works about 6 months down the road. So 6 months from now, the Fed raising rates is going to take effect in the future, which is why it's a very difficult strategy for them to play, because if we do see commodity prices coming down, and if we do see a cliff that inflation is going to fall off of, and all of a sudden we go from 8.8% to like 6% in 2 months, if the Fed is tightening way too fast and they're too hawkish, that could be detrimental to the markets 6 months down the road. So that's why a lot of people are like, go hawkish now, and they're like, I think they should have earlier, but hindsight's 2020. So looking at it, they have to be careful with that, because again, it's going to take effect in the future. And if in the future the interest rates are going to be down, to 4%, but the interest rates are too high, that could really hurt the market down the road even worse and push us into a deeper recession. And other news that we're seeing right now when it comes to the economy, recession, is the whole entire crypto market, which has been kind of a leading indicator as to what we're getting into. And I was talking with Vinny the other day from the Investment Club, and that video is going to be linked in the description down below if you want to check it out. And we were discussing crypto right now, and it's sort of similar to like the dot-com bubble that we had been in back in 2000. And back then, the internet came out, a lot of these startup companies came up, and they were like not profitable at all. Everybody thought they were going to the moon, and then boom, they all popped, the market crashed down. I think something similar is happening when it comes to crypto. And when we see the cryptocurrencies themselves coming crashing down, and some are going under and going away entirely, The rest of them are, holding, but definitely have come down significantly. But a lot of companies like 3AC and now Voyager Digital this morning announcing bankruptcy. So again, we're going to see a bunch of these companies who are just starting up, and it's the cryptocurrency ones that now seem to be the first ones that are toppling. If we continue going this direction, we might end up seeing a lot of other companies who are not profitable also follow suit. So this may just be the start of it. Maybe it's just crypto that this happens to, but we're starting to see these things happen. Let me know if any of you were in Voyager Digital, or if any of you had any of your assets through them and holding any crypto through their platform. So we also did get announcements right after closing today that GameStop is announcing a 4-to-1 split. So anybody who holds shares will be given a 4-to-1 split in a fashion of a dividend, very similar to how Tesla is going to do it. So for every share that you have, you will end up having 4 shares of GameStop as of after hours of July 21st. So on July 22nd, you will have all of those shares sitting at 4 times what they're at. Again, when it comes to splits, all of them, valuations remain the same. So you multiply your shares by 4 and you divide the share price by 4. Everything stays the same when it comes to valuation. So GameStop doing this, I don't know. A lot of times companies do it because they're in a position of strength. I know we had heard about this earlier in the year, but it's like Tesla, Amazon, Google, these companies doing a split is because the companies are in strong financial position. GameStop, on the other hand, I don't know. That one, if you guys have GameStop, let me know. It's not what I got into. It was more of a momentum play. I loved the movement that was going on with it to get the suits out, and it definitely worked when we saw Melvin Capital close their doors. So that was pretty cool to see, because that means that us as the people actually made a difference when we came together. So that was pretty cool. Not cool for anybody who worked there and ended up losing their job and going under, but it shows that we do have power as retail investors to make a big difference. Let me know your thoughts in the comments. How did you feel about the Fed minutes today? Where do you think that we are going to be trading over the next week leading into CPI data? Seeing as the market, basically just recovered and went a little bit green today, do you think that's an indicator that we're going to be going even more green tomorrow? Or maybe we're just going to sit flat for the next week? Maybe we'll go red. I don't know, and I say it all the time because I can't predict tomorrow, but just looking at the different things that are out there, I just like to present to you guys all the different insights and information that I can see on all ends of the spectrum. And again, I just take what the market gives me, but I know a lot of you guys out there, play different things as to what's going on, especially when it comes to options. So let me know your thoughts in the comments about that. Let me know where you think we're going to trade and what your strategies are for the rest of the week. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, I do have a Patreon. That link is also in the description. Thank you so much. Have a great one.